Greetings. I'd like to welcome everyone in our audience today. We are very grateful that you have chosen to share some of your busy day with us. We know that your time is valuable, and we'll honor that today with what I'm confident will be an engaging discussion. Once again, our topic is 2024 Under the Radar Trends for Banks, Credit Unions, and Financial Institutions Planning Their Embedded Cross-Border Payment Strategy. Our sponsor today is Brightwell. Our host is American Banker, and my name is Mike Sisk. I'm a contributing editor at American Banker, and my articles have also appeared in Barron's, Keynesian Business, Inc., Institutional Investor, Strategy of Business, and Worth, and I will be your moderator today. And I am very, very pleased to introduce our two speakers today. Richard Meszaros is with us. Rich is a seasoned digital executive and product leader with over 20 years of experience in building and growing digital businesses for global brands. He is currently the Vice President, Head of Cross-Border Money Management, Visa Direct at Visa, where he is responsible for the commercialization strategy and business growth of Visa's real-time push payment platform that leverages Visa's global payment network to facilitate fast, simple, and secure digital payments worldwide. With a passion for creating innovative products and solutions, Rich has a proven track record of launching and scaling digital products and services across banking, money transfer, credit, and payments, leveraging emerging technologies such as Internet of Things, blockchain, and digital currencies. And we are very, very pleased to have Rich with us here today. And joining him is Hal Ramakers. With 30 years of experience building and managing global solutions to complex business issues with small and Fortune 500 companies, Hal serves as Senior Vice President of Brightwell. His experience at Brightwell is focused on cross-border payments, partnerships, and compliance, having sourced, negotiated agreements, and managed relationships with multiple remittance providers. Hal has extensive knowledge of the payment rails, technologies, regulatory compliance requirements, and processes to support cross-border payments. And also delighted to have Hal with us here today as well. And just a kind of a quick note before we begin. Visa needs no introduction, of course. Brightwell might be new to many of you. Brightwell is a member of Visa Direct's Preferred Partner Program and is integrated to more of the Visa Direct product options than most, if not any, other fintech at this point. So in today's webinar, we'll start with an overview from Rich and Hal about some emerging trends impacting the financial services industry. Then we'll dive into a discussion about the industry outlook for 2024 as emerging technologies, new payment solutions, and new use cases for cross-border payments come to the forefront. And you'll also learn how these upcoming trends can improve customer experience for financial institutions by helping them meet the evolving customer preferences for quick and compliant payments. And as that little introductory video said, we do have time at the end for Q&A. Usually we've got about 10 minutes or so. You can put your questions into the queue throughout the hour. You don't have to wait until the end, so please get those questions in there. We very much want to hear from you. And if we run out of time and can't get to a question you've asked, we'll definitely follow up after the program. So please do ask away. And we also have a couple polls today, and I always encourage 100% participation. We share the results live with everyone here today, and it's a great way for everyone to see where other folks stand on the issue we've come together to discuss. So if you can weigh in on those polls, that would be fantastic. So with all that, let's start digging into things here, and just start real quickly with with the agenda. I sort of outlined it a little bit there, but we'll be doing kind of under the radar trends. We'll be hitting the 2024 outlook. Then we'll have that Q&A, as I said, and these kind of three trends that we'll be discussing here. Should these trends be on your radar? Decentralized finance, central bank digital currencies, and embedded finance. So we'll be getting into all of these in a lot more detail in just a few minutes. Before we do that, I would like to just kind of table set things here with our first polling question. And the way this works is I'm just going to read the question, read these four different answers, and then hopefully that gives everyone enough time to make their selection. So which of these emerging trends do you feel least informed about? Would that be DeFi? Would it be CBDCs, embedded finance, or do you feel like you really need to know about all of them, all three of these? And as I said, we will be discussing them all today, but it'll be interesting for both Rich and Hal to sort of see kind of where our audience together today is kind of on these issues and where you are looking for kind of the most, the most information. So Let me just hold this open another moment or two. And I've got a little handy tool down here that lets me see how many of our audience members have participated. And I like to get a nice selection before I close it up here. So let me just hold it open another minute or two. Don't want to burn too much time here in the beginning because we've got lots and lots of content to get through here. Okay, good. This is a nice selection. Thank you, everyone, for participating here. So we got 42.9 say I need to know all of them, and that's great to hear. And that 21.4 CBDCs, embedded finance 19.6, and DeFi 16.1. So thank you all for that. And I guess Rich I think I'm going to you first here. Do you want to? First of all, are those responses sort of what you expected to see, or any surprises there?
Yeah, no, I would say that's very aligned in what I was expecting to see. I think all of these three trends, DeFi, CBDCs, embedded finance, there's certainly a lot of discussion and innovation that is tied to all three of these within the industry. I think, I guess first of all, I thank you very much for allowing me to participate today. I'm glad to be with you all. And I thought maybe the best way to start here is let's just kind of get a couple of definitions on the table here and describe what we really mean by something like DeFi. And because it's a very broad term, but it really refers to this shift from kind of a traditional centralized financial systems to more aligned to peer-to-peer finance. And it's often enabled by decentralized technologies that are built on blockchain networks or distributed ledger networks. That includes different types of protocols and smart contracts and dApps, even in Web 3.0 as well. And it's really helping to kind of derive what we refer to as kind of that the new internet, with fewer kind of central intermediaries, where users own their own data, and where kind of web processes, where the web processes content in a human-like and semantic manner. And I think what it means from a financial transaction perspective is that it allows for the financial transactions can now be managed through technologies like a cryptocurrency or a stablecoin, and the use of an enterprise blockchain technology. And this can be everyday banking activity, such as obviously payments. It could be loans and mortgages, and it could even help to facilitate more complex financial transactions, such as asset trading. So I think one of the key things about DeFi to really take away here is that this relies on these digital assets, including CBDC, stablecoins, and various cryptocurrency tokens, even non-fungible tokens or NFTs as well. I think one thing that I guess I might just suggest before, Hal, I'll pass over to get your thoughts on this as well, is that I think DeFi, in my view, is really a form of the digital disruption that we've seen within the banking system and the financial services systems for some time. DeFi has the potential to disrupt kind of traditional financial systems, especially things like potentially cross-border payments. But I don't think that's something that we should be scared about. I think that's something that can allow us to really derive, innovation within the sector. I mean, if we look at some of the things that, the industry has been a part of over the last, several years or even the last decade, there's this move towards digital first, right? Where fintechs really started out with, how do we bring banking, into the palm of your hand and allow consumer kind of anytime, anywhere access as it relates to, their everyday banking needs. And that really drove innovation for banks to be able to create kind of similar and competitive capabilities in that place. And, the other aspect here is customer expectations. They expect quick, user-friendly, accessible services. And, obviously this mobile forward technology enables that. And then the other aspect I think that's important to kind of recognize is the fact that from a pricing perspective, fintechs can offer oftentimes very competitive pricing on banking products, including things like loans or payments, especially cross-border payments. And how does that kind of impact the way we think about the disruption that they're trying to drive within the industry? Let me pause there, Hal, and see if you have any thoughts on this or what you'd like to add to this. Oh, Hal, I think you might be on mute.
My apologies. Somebody had to mess up first. I'll take it. So first of all, I want to also thank everybody for coming today and spending your time with us. Rich, I think that was a great introduction to decentralized finance, right? I think DeFi, and we get out into the crypto world, it's really interesting that it's got the potential of really mirroring everything that happens in a standard banking world, right? So a lot of the products and services that we're talking about, we talk about lending and borrowing, right? So you can actually use cryptocurrencies as assets to earn to earn interest and build a financial system around that. You've got the ability to move money inside of a crypto world, just like you have payment rails like Visa today, and other payment rails as well. The currencies, right, through the different types of, whether it's a cryptocurrency, whether it's currency, or whether we're talking about a CBDC, which we'll talk about more in a couple of minutes. But I think where the world sits today from a DeFi perspective is we've seen the early adopters go into that world. It's still a very complex world. So I think when I'm looking at it from a banking perspective, yes, there's some more savvy technical people that have very much gone into that world. And they've started creating some really interesting technologies and interesting use cases that start to replicate what is done in the banking world, right? I'll go even one step further. Besides the lending and borrowing, there's market makers, there's liquidity mining, and then there's also risk and management, risk and insurance protocols. There's a lot of risk that sits in the DeFi world today. I think the industry, took a pretty big step back in 22, 23 with the collapse of the crypto market and then the FTX. But I think it's going to come back. I think as we look forward, what is going to drive DeFi forward, right? What are the advantages of DeFi that are going to take us and bring this technology forward? So I think the question on the table is, when is it going to really become very relevant and become the bigger threat? So how we can prepare for that day, and how do we prepare? So maybe we can go, Rich, and talk a little bit about some of the advantages of DeFi, and then let's maybe come back and talk about some of the risks of DeFi.
Yeah, no, I think that's great, Hal. And in my view, one of the most significant advantages is really access. And I think what this really gets to is financial inclusion. I mean, we talk a lot about financial inclusion within the industry, but how does a DeFi platform can provide accessibility to financial products to a broader set of consumers, especially kind of the unbanked or underbanked consumers, on a global basis? If you look at the World Bank, they estimate there's 1.4 billion people that remain unbanked worldwide. And these types of DeFi platforms can offer a range of financial services without the need of kind of a traditional intermediaries, which can provide a sense of, everywhere, anywhere access to these basic financial services, which quite honestly might be kind of unattainable for these customers. And so I think that's a really interesting element. The second aspect, and I mentioned a bit. Go ahead.
Hey, Rich, if I can maybe just jump in really quick, just to kind of build on that. We all talk in a banking world very heavily about, the unbanked, the underserved, right? And I think this has a potential in certain parts of the world, when we start thinking outside of the United States, of becoming very relevant in some areas that might be less expected, right? Let me give you an example. It's interesting that when you look at the movement of money here in the U.S., everybody's very banked. But if you go and look in Southeast Asia and other parts of the world, wallets have become very prevalent. And why did wallets become prevalent? Because a lot of Southeast Asia missed the jump from laptops into the web world and went straight into a wallet world. And it changed that behavior. I think it's also entirely possible here that the unbanked, once they start seeing some of the new services, which are going to be very focused on some of the unbanked, and the innovators start creating easy use cases. Because right now, again, we said it's a complex technology, but once that gets simplified, which is what fintechs are really good at doing, I think it's got a potential in areas like Africa and other countries where wallets haven't taken a full foothold yet. In Latin America, there's not one single one, there's single ones everywhere. I think it's got a chance to really make some ground there. But I think it's going to take some time. I think that's the thing I can't get over is I don't see it as much a 2024 as I do a couple of years beyond there.
Yeah, I would agree, especially from a DeFi perspective. I mean, obviously wallets is, we're seeing adoption of wallets in some markets. I mean, we all kind of see some of the big wallets that are out there, like, for instance, WeChat and WeChat Pay, obviously reaching over 1 billion people in China. I mean, those are huge populations that you can now have access that are using this as potentially a primary financial device every day. So I agree. I think this is a really interesting space. Thinking more about some of the other advantages of DeFi, I mentioned it earlier, kind of the lower fees. How can DeFi kind of reduce transaction fees by potentially removing some of the intermediaries, especially when you think about cross-border payments, right? Where you might have multiple hops through multiple correspondent partners. How do you streamline that distribution of value between the different partners to deliver the funds from a sender and a receiver, for instance, for a remittance transaction? And so, when you look at some of the information that's out in, that both World Bank and others publish around the total cost of remittances, it can be sometimes as high as 5 to 6% of the send amount is the transaction fees that the sender is paying for these transactions. And so does it have the promise of being able to start to lower those types of costs associated with those transactions?
Yeah, I think it's great. And when you think about the capital cost of doing cross-border, right, with the real-time nature of being able to convert from a fiat to a crypto to a fiat, right, that becomes a very intriguing idea because they can take a lot of that cost of the capital of pre-funding in each one of those countries where you're sending money to around the world.
Yeah, exactly. And I think the last opportunity I would say around DeFi is really both security and transparency. So because of the use of some of these digital assets that we've been talking about, the use of blockchains and cryptocurrencies, it can provide enhanced transparency as to the transaction that can also potentially improve compliance monitoring of things like AML and maybe streamline the onboarding process as well.
It's interesting, right? When you look at DeFi in the crypto world, when I first got into it myself and started looking at it, right, you hear about the anonymity. There's, everything's anonymous. Really, what's been really anonymous up to now is just knowing who an account belongs to, right? The open ledgers show every single transaction of every single trade, every single money movement that happens in a DeFi world. So it's actually extremely transparent, right? As long as we start to understand who the actual users are behind it. And I think that's the biggest question when we get into a regulatory perspective is how do we start to crack some of this? And what does that mean from a privacy perspective, et cetera, and a security perspective?
Yeah, and I say, you just mentioned it, Hal, but I would say that's one of the biggest kind of risks in DeFi is the regulatory complexity and really a lack of a clear regulatory framework that banks and others within the industry can really rely upon as they think about how they can leverage these technologies to create new offerings in the market. And I would say the second risk I would say is also, and you mentioned it earlier, is a little bit around the uncertainty and kind of the value fluctuation in some of the key cryptocurrencies that we saw. I mean, obviously in 2021, we saw Bitcoin go from 29,000 to 64,000 back to 30,000 all within a series of months. And so that type of fluctuation obviously is very challenging when you think about it as a method of transferring value, which is why I think, things like stable coins and central bank digital currencies, really can help to kind of take that pressure, that risk off, some of these new decentralized DeFi products that we've been talking about.
Yeah, I think there's still some insecurity in the actual smart contracts and the technologies there as well, right? Everything is still private. The security in actually securing these transactions is still not probably where it needs to be. But I think we're starting to actually get into a good pivot here into our second topic of conversation. We've talked a lot about the insecurity of the volatility of the cryptocurrencies, but maybe let's talk a little bit about how does that really get solved? Where is that the actual technology for the currencies? Where is that really going, right? So maybe defining a little bit around the CBDC and what is a CBDC, and really to understand what a CBDC is, you really kind of have to understand the three different types of digital currencies that are out there today, right? If we put those into a bucket, you have a cryptocurrency, right? So when we talk about Bitcoin and et cetera, we've got really a private digital coin, and they're really not backed by anything tangible, right? They can be created and stored in a liquidity pool. And it's really interesting. Recently, there was Monday, there was an article where Ravi Menon, the chief of the Central Bank of Singapore, made a comment where he feels like crypto in itself has kind of failed the basic test of financial services because it can't hold its value, because there isn't anything that is supporting the value of that currency, which then really leads us into, right, and that's because it's decentralized, right? The cryptocurrency is completely decentralized. It's not pegged or hooked to anything. The second really type of digital currency, right, we get into a stable coin. And really that starts to remove some of that market risk equation. And it can be used now with more relative certainty and comfort in valuation when you're using it as a transfer mechanism. So even when we're talking today, right, we're talking about using it for cross-border payments. You see some companies doing that, right? They're not really doing that with a pure crypto. They're doing that with a stable coin, because then they have that security of the value of that transaction. Happens very quickly, but still with a crypto, we've seen how fast it can move and how that can impact, especially with a large value transaction or high volumes of transactions that are going. So stable coins, right, they are still a private currency, but they are actually pegged to some kind of underlying assets, right? Such either as another currency, a commodity, or other kind of financial instrument in order to maintain that value of a stable coin. I think the piece that's missing for a stable coin is still the regulation, right? We mentioned that a little bit before. The regulators are still struggling with how do we actually regulate even the stable coins or any type of crypto that's out there. And then the third type of digital currency that's out there, more of the focus of our discussion today on where it's heading and how it's going to change the banking world, is the central bank digital currency, otherwise known as the CBDC, right? It's got the same secure tied to a secure feature, but that's the United States government, or it's the Indian government, or it is the Chinese government. So it's similar to a stable coin, but it really is tied and controlled by the government, which then creates a lot of other challenges as well as we walk through and talk through the pros and the cons of central bank digital currencies. I think it's also important to note that there's different types of CBDCs, just at a high level, right? There's not a single central bank digital currency. There's probably some 70 to 80 different central banks globally right now that are looking at different forms of implementing a digital currency. You actually have a first one that was released in Jamaica that went in, it was actually adopted locally. It's had some real issues, but it actually did go live. And then really, when you look at those 70 or 80 banks, what's really interesting is that they represent about 90% of the global GDP. So when you think about that, really, it looks like the use of a CBDC is imminent. But again, if you look at where we are today, is it a 2024 thing we should be worried about, or is it further out? What do you think, Rich?
Yeah, I mean, I definitely see that there's a lot of interest and activity within the central banks to start to work on this. But I agree. I think it's still in front of us. I think what's really interesting around the CDBCs is, and you mentioned this, but the way that I think about it is the key benefits of this is bringing some of the capabilities that we've seen of digital currencies, like the speed and accessibility, while maintaining the stability and trust of the traditional banking systems. And to me, that's how I think about what a CDBC is. And I think the key here is, how will it revolutionize cross-border payments? And so maybe I'm going to switch there and say, I think what's interesting is that it can again eliminate that need for that intermediaries. I mean, if you think about a complex cross-border transaction, right, there may be 2 or 3 different banks that are involved in a single transaction. And can a CDBC and the exchange of value between those banks allow for it to be streamlined and simplified and sped up, and ultimately have lower costs in the forms of like lifting fees, et cetera. And I think that's where I think the promise here of how this technology can transform it. And it also can provide greater transparency. Can offer transparency as to the specifics around the transactions itself, and then also help to be able to monitor these transactions from a fraud or money laundering perspective as well. And then ultimately, I come back to my financial inclusion again. Can CDBCs help bring financial services to unbanked and underbanked populations who may just not have easy access to kind of the traditional banking systems that are available, in other markets?
Rich, do you think that, what is driving the interest in CBDCs, with all of the central banks globally? You go out and you read a lot of different things. I'd love your opinion, but definitely I think COVID has helped to drive us further ahead in the CBDC world, because you've seen a lot of plummeting cash usage right now, right? So cash isn't being used anywhere near where it was. So people say that during COVID, we probably leaped forward, probably 4 or 5 years in the digital age. I think also, are these central banks also maybe feeling a little bit threatened because they're really not the payment innovators anymore? They're not providing as much value in the chain, and is there some threat from the fintechs and these other solution providers with these new types of payments?
So I mean, I wouldn't say it's a threat. I think we're seeing interest from central banks across the world in exploring, what role CDBC can play in the future of money. And obviously, Visa is very eager to work with them to identify kind of the most compelling CDBC use cases and how to bring those to life with secure, convenient, and reliable technologies that can seamlessly integrate with existing payment ecosystems. I mean, I think that's the key. We need to think about how individuals and businesses get access to these currencies, these central bank digital currencies. But we also have to think about the other side of the equation, which is the acceptance side too, and how will merchants accept these types of digital assets for payments for goods and services as well. I think, as I look at why is there such an interest here, I think at the core of this it's really around the digitalization of money movement, full stop. It's just looking at the trend that we've seen now for a decade or even longer around moving into, more forms of streamlining the way that money moves. And obviously, when you start to talk about this on a global basis from a cross-border perspective, this is obviously very paramount and critical. It's from everything from enabling new types of payment flows, which Visa is very focused on, and the ability to kind of improve and reduce the friction of moving money around the world. Obviously, stable coins, tokenized deposits, and central bank digital currencies, play a role in that. And I think as we think about any of these types of digital assets, including a central bank digital currency, we believe there are several components that are really necessary to get right to really drive adoption. First of all, that technology itself has to be scalable and secure and resilient. Secondly, you have to have this broad global acceptance and interoperability that, quite honestly, you see with a Visa debit card or credit card being used anywhere around the world. And then ultimately, it has to have a compelling value proposition for the users as well. They need, it needs to drive either convenience or enhanced features that create additional value for those users while protecting them from things like mistakes and fraud. So I think those are
Rich, it sounds like all this is still, it sounds like it's further out, right? We're still several years away. It doesn't sound like it's the 2024. We should be aware of the trend that's happening and start thinking about what that means to our individual institutions and how we react. But the real question I have then is, if those are not real today or as much of a threat in 2024, what really can banks do today that can really expand, right, their revenue streams, provide more use cases to their users, and bring more options and ways to make users and consumers sticky in their world? And is that really the topic of embedded finance?
Yeah, I think it is, Hal, and I think that's a great transition to that third trend, which is, embedded finance. And really, the way that I think about embedded finance is the integration of financial services into non-financial service offerings across various categories, whether it be payments, lending, insurance, banking, or others. And quite honestly, the goal here is to bring that financial either information or solution or action into other business applications kind of at the right time, at the right place, to be able to drive simplicity, automation, and efficiency for customers and individuals from a business capacity alike. And I think what I think is the goal here is, how do we take these everyday digital experiences that we as consumers enjoy and use every day, and how can we bring that into kind of the commercial side with corporate end users of creating kind of new digital omni-channel experiences to access these types of financial services. And so obviously this is an area that Visa as a network, offers capabilities to deliver these types of embedded finance solutions even today for the benefit of our corporate clients. Things like, virtual card credentials or token accounts for the ability to generate kind of single and multi-use tokenized commercial cards, which really can help streamline, that payment facilitation. It could be things like accounts receivable manager. Visa has a program here for Visa Accounts Receivable Manager that allows for a virtual card automated acceptance for merchants. And then obviously we get to something that I'm very passionate about, Visa Direct, which is the ability to kind of move money to cards, accounts, and wallets to 190 countries and territories around the world, and pay out in 160 different currencies, and have access to 8.5 global endpoints around the world. So maybe this is where, go ahead, Hal, please.
No, go ahead.
I was going to say, maybe this is where we get to our next poll, and really start to kind of transition to, okay, we've talked about some of these emerging trends, but what can I do now? What can I do in 2024 to be able to start to derive additional value and revenue for my institution using some of these technologies, kind of under the umbrella of embedded finance? And so, what are the emerging technologies like full stack technology capabilities and APIs and SDKs, and new payment solutions, things like sending to a debit card, sending to a wallet, sending to an account around the world. And then lastly, kind of what are the use cases that we're seeing? There's so much innovation happening within these use cases. And perhaps this really leads us to our next poll, Mike, and maybe I'll ask you to transition to you to kind of tee up our next poll here on these kind of what's the industry outlook for 2024.
Fantastic. Yeah, happy to hop in here, Rich. And yeah, so this is gonna set up the second half of our program here really nicely. So same drill as before. I'm going to read through the question, the couple of answers here, and hopefully that gives everyone enough time to weigh in, and hopefully we'll get as good a turnout for this poll as we got for the last one. So which of these issues do you expect to have the greatest impact on the payments industry in 2024? Emerging technologies, rise of new payment solutions, or evolution of cross-border use cases? I'll just hold things open here for another couple moments to get a good selection here, and then we'll be off to the races with the second half of our program. Yeah, okay, good. We've got a nice participation here. Okay, I'm gonna go ahead and share the results right now. There we go. All right, so 45.2, rise of new payment solutions. Emerging technologies, 31%, evolution of cross-border use cases, 23.8, but definitely that rise of new payment solutions, that's what's got almost half of our audience's attention. What do you think about that, Rich?
I think Hal was going to talk a little bit about the emerging technology to get started here. So
okay, Hal. Yeah, I'm sorry. Yeah.
That's right.
Yeah, no, thanks, Rich. Look, I think I want to just maybe spend 2 minutes here telling a quick story about Brightwell. Right, Brightwell, we're a fintech based out of Atlanta, Georgia. We started in the cruise line industry, building a fintech solution to pay cruise line employees that come from all around the world. And about 98% of them are from somewhere other than the United States. And what's interesting is, we had to solve a lot of unique problems for those cruise line employees, because what they're really doing is they're at sea trying to make a better life for their families. And what their world is really about is making money to be able to send that money back home. So we built a solution with a Visa payroll card, a prepaid card where crew members could store money onto their card. And that's how they got paid. The interesting thing then was we found they were just taking the money off the card, and then they were walking into Western Unions and MoneyGrams and other companies to send the money home. And it's interesting because now, fast forward here several years, we own a very large percentage of that cruise line space. And now we've gone completely digital. In order to build a really great solution for the cruise lines, we built integrations into the preeminent money providers and money transmitters digitally into our mobile apps to allow them to be able to send money home. And it's interesting because I also ask myself, why don't banks have this solution built in? So, and I think the answer to that question is the experience that we went through of actually creating a cross-border solution inside of a stored value solution like a prepaid card, which could just as easily be a bank. We integrated into 5 or 6 different remittance companies. Why did we have to do that? Well, you had to do that because there's not a single solution that gives you access to all the different modalities that crew members or any other migrant in the world needs. For instance, right, if you're talking with somebody who's from India, most likely they're going to want to send money home directly to their bank accounts. India is almost all bank account now. Indonesia, a few years ago, was focused very heavily on cash. Now they've gone digital into 2-account payments. But yet you go to the Philippines, you go to Mexico, you still have a need to send cash. And it's very difficult to find a single remittance company that you can integrate into. So we went down the path of integrating into multiple remittance companies. Each one of those integrations took us probably 6 to 7 months worth of development time and integration time. It's extremely expensive and time consuming. And then the maintenance of those technical connections with changing data requirements, right? When you're sending to different countries, next month you may start needing to add a purpose of payment field. You may need different country code updates for different providers. So the maintenance technically with of these integrations is also very cumbersome and time consuming. So we got to a point where we really looked closely at our experience and we saw a better path. What we said was we could build a much better solution using up-to-date APIs and also an embedded SDK that can be dropped very easily into many different use cases, whether they be banks, whether they be program managers, whether they be neobanks, or even in corporations for use cases like doing payroll, doing passenger payments, et cetera. And we'll talk about that a little bit more in just a couple of minutes. But now we've taken that ability to be able to do that integration, which may take 6 to 9 months with 3 or 4 different providers, which becomes very expensive and time consuming. And now you can do that through Brightwell with our Ready Remit product in a matter of just a few months. Through a single integration, you have access to all the modalities that we just talked about. And we've brought those different modalities of being able to push money anywhere in the world through some great partnerships with the networks, and especially with Visa, with their push-to-card solutions, with their 2-account, their wallet solutions, and we're continuing to expand that relationship. And also with the other networks like MasterCard to be able to enable those solutions. The second reason that you have to solve for is the compliance component of actually bringing cross-border payments, right? And there's a lot of heavy lift that comes in understanding and supporting a cross-border payments program. Many banks are just not today structured in a way, nor do they have the understanding of how to do cross-border payments. So what was the result of that? Well, the result of that is banks used to do wires in the back offices, but now consumers and businesses even have gone out to the third-party remitters. So they're going out to the Wises of the world, they're going out to the Remitleys, they're going out to the Western Unions to do all of their digital transactions because the banks don't have an embedded solution. Because up until now, there hasn't been a good solution that could be implemented easily, cost-effectively, and in a very compliant way that shifts a lot of the compliance burden off of the banks and onto another party that can manage that for you. And that's what we've been bringing to the market now. And we're talking to a lot of banks today and implementing with a lot of banks today and other use cases as well. So the technology world is very quickly adapting and coming and making banks more relevant again in the cross-border space. And that's what we bring to the table with a great partnership with Visa. Rich, you want to touch anything on that?
Yeah, I was going to say, I mean, to your point around the partnership that we have, I mean, obviously through the Ready Remit platform that you all have built, you have access to all of those Visa endpoints that we described. So it's the single largest, payment network in the world, totaling over 8.5 billion endpoints across, cards, direct to account, as well as wallets. And wallets is really an area, and I know we talked about this very early on in the call, is an area that we've really spent a significant amount of time in the last 12 months to really bring online. So, and just recently we announced our new collaboration with Tencent to really bring in the WeChat Pay wallets that total over 1 billion users in China, and that's in addition to partnerships that we've announced, with both Tunes and TerraPay, to be able to expand our wallet access to over 100 different wallets across 50 different countries and territories. And so that's just an example of how we're continuing to innovate in the network to kind of bring those global endpoints to partners like yourself, Hal at Brightwell, to be able to offer that type of choice and access to customers that are needing cross-border payments, whether they be for remittances or other types of kind of B2C payouts that are so prevalent and rising in today's world.
Yeah, I think it's critical. I think it's also a threat here for not having cross-border payments embedded in the banking world. Otherwise, those transactions, those users are going to go to other solutions. I think it's interesting, right? And a lot of times the banks have been primarily focused about just retaining their users. But I think what they forget sometimes is that the third parties that are doing these outside transactions, right, they are also providing competing banking products. Some of their goals are to build competitive banking products and entice the users away from the bank while they are doing those transactions. You could lose your core banking experience. I think looking at a 2024, I think that this is real, this is now. This gives us a way to go ahead and implement a new solution, new features in a bank that allows the consumer to be more sticky, give them an embedded solution that's easy, and has the broad reach of all the different modalities that we've talked about.
Yeah, I agree. And I think maybe this is a good place, Hal, for us to kind of transition into some of the use cases. Because we've already been kind of talking a little bit about remittances. Maybe we start there, and I'm happy to start, and then I'll pass it to you. I mean, if you think about the remittance market, I mean, the World Bank estimates it's over 773 billion is transferred on an annual basis, and the majority of that is coming out of North America at over 200 billion. So it's the single largest remittance market in the world. And really what we're seeing that's driving this is global workforce and increased migration. I mean, the World Bank estimates there's 286 million people live outside of their country of their birth. And, you know, to the example that you provided earlier, how within the cruise ship industry and the employees, you know, they're working, they send money home. And the key here is that it's a significant kind of frequency. It's a very sticky product. You know, depending on, you know, the customer segment, you can see anywhere from 8 to 12 transactions a year, sometimes even more. So being able to offer that within your bank as kind of a core feature of, let's say, a checking account or a relationship, you know, can really drive the engagement that the customer has with your product. But let's face it, it drives new fee revenue and FX revenue, you know, to your organization. And I think that's actually a really key opportunity to start to think about, you know, within the market today, and how your team has a tremendous amount of experiences in remittances. You know, what are your thoughts on that as an opportunity for banks?
I think it's a huge opportunity for banks, and we're talking to some very large banks today, I think, that are really agreeing with us and saying, yes, we should be implementing these solutions. You know, it's interesting. Remittances is a huge opportunity. In order to do it, you have to have the network, you have to have easy technology, you got to solve the compliance. Again, that's real today. The other use cases that are there as well too is in the corporate disbursement space. And again, the same problems exist. You have a lot of need to do faster payments that are secure payments, and those corporations don't want to hold on to PII. They don't necessarily want to be in PCI. They don't want to be in holding on to a lot of the PII of their users. And this is where there's a lot of other use cases that we are building to today. We're working with the likes, we started with our cruise lines, but also now with the airlines and other travel institutions who have a need to do passenger or user payments in a real-time fashion. And that's a great fit for a push-to-card solution, right? So because there you've got almost a near real-time transaction, you've got extremely high adoption, and what a different use case that you could have if you're doing a passenger refund for a baggage claim or some other bad experience that a consumer's had, rather than saying, I'm going to give you, here's a few credits, or we're going to cut you a check, or you'll get your money in several days using an ACH process, but you've got to go and find your ACH numbers in your details. But what if that experience could be different, where literally you could just send a file or send an API call out that literally then sends a link out to a consumer who receives that link and can almost instantaneously in a near real-time fashion, direct the funds to their account, receive notification in real time, and all they had to do to get the payment details to make the payment is reach into their wallet and grab that debit card from their bank. Those are powerful solutions that will change the way that consumers react to negative experiences, and we're seeing a lot of interest in that world as well.
Yeah, so I want to build on that, Hal. So you talked about passenger payouts. I mean, you could also include here, gig worker payouts. A marketplace seller that is selling goods on a marketplace and needs to be paid for the goods that have been sold, or a content creator that is doing additional work for somebody on one of the major content provider sites and needs to get paid for that work. But I think this is where it comes back to this embedded finance theme that we've been talking about, and some of the trends around real-time payments, streamlining cross-border payments, et cetera. It's about banks kind of walking away from kind of traditional batch processing of payments and bringing, solutions, like what Brightwell and with Visa Direct as that payout network underneath can create new applications that you can then bring access directly to your corporate clients so that they can then provide these types of payment services directly for your corporate clients and users. So let me give you an example here. You're driving for a ride hail service, right? And you've just finished your shift, right? And you go into your driver app and you want to basically cash out of today's receipts so that you can buy some groceries on the way home today. So you take out your driver app. There is a application there that is offered, through your bank by that corporate client, and allows you to have that user directly say, I'd like to request this amount, and within seconds that money is in their account, potentially in up to 190 different markets around the world. And so that's the expectation that's out there. This is what customers are expecting to be able to receive those funds. It's no longer the days where I need to plan to make a disbursement 2 to 3 business days in advance. And, heaven forbid, if I need a payment, I need money on a Saturday morning. And so those are the types of trends that we're seeing here. And I think that's how we can kind of bring this all back into that embedded finance and the opportunities that banks really have to bring this new capability, this technology directly to their corporates through the channels that they already provide access to these customers today.
I think that's a great summary, Rich. We had promised everybody time goes by so fast that we'd leave a little bit of time for questions and answers here at the end. So maybe we'll go ahead and open it up and answer a few questions. So much more to talk about, so much more to learn. Hopefully we can hear it from some of our folks here. We'd love to tell you more about our solutions. We'd be happy to have somebody reach out to you and talk to you from Brightwell about your specific needs, your specific use cases. But let's go ahead and open up for some questions and answers.
Excellent,
Mike?
excellent. We've got some. Can you hear me?
Yes.
Yes.
Okay, excellent. Okay, yeah, I was having a little packet loss there, so just to make sure you can hear me just fine. So good. We've got some good questions here from the audience, and if you've got anything on your mind, everyone, now would definitely be the time to get that question into the queue. But let me start off. So what is the let's see here. What's driving the dramatic increase in cross-border transactions? And let me throw that to Rich.
Yeah, I think it's a couple of things. I mean, first of all, I mentioned just the migration that we are seeing, where people are moving to other countries, for opportunity. And so from that perspective, obviously that can drive remittance volume back home. But then when you start to look at the corporate payout perspective, I think just look at all the innovation that we've seen over the last 5+ years on kind of new models of, within the gig economy today, content providers, influencers on social media, gamers, right? All of these types of new business models, present the opportunity and, quite honestly, also the challenge of how do you pay these people on a global stage, right? And I think that's really where you kind of see the power of a network like, Visa being able to have access to those 8.5 billion endpoints, and then technology partners like Brightwell to be able to really take all of that technology and create a easy to consume capability that you can incorporate that directly into those providers that need to send money anywhere around the world. So I think it's really two things. It's this migration that we're seeing and for opportunity, but I think the second aspect here is we're just seeing the emergence of all these different business models that, quite honestly, there's an exchange of value or payments that's central to that business model.
Excellent. Thank you, Rich. All right, we are close to the top of the hour here, but I think I can get one more question in here. Hal, question from the audience: why not just build this in-house?
Yeah, that's a great question. I think we touched on that, but it's a great highlight, I think, to end with. At the end of the day, to build this in-house for a bank especially, it's going to take probably at least a year to get a full modality set of the full network reach. It's going to take multiple integrations to do it right. And the cost of that is, I think, extremely significant, and it doesn't need to be a cost to that extent. There are easier solutions to do that. The second reason why it doesn't get built in-house is the compliance component. From a compliance perspective, right, we need to deal with the remittance transfer rules and underneath Reg E subpart B. You've got Dodd-Frank requirements, Durbin requirements. The list goes on and on of all of the regulatory requirements that it takes to stand up a program, the monitoring, the sanction screening. The list just continues on and on. Again, it's different than core banking. It is different than most of the services that banks offer today. That's why I think it is a great opportunity to come in through a partner bank with Brightwell, with our Ready Remit solution. We still, with our platform, can graduate any bank to be their own sponsor bank if they would like to do that. So we can start with a fully white glove service that brings you the networks, easy technology, and a full regulated solution, and then allow you to take more control as time goes on. And we will partner with you to educate you on doing cross-border payments, user behaviors, and the use cases to help you implement the solution. I think that's what it takes to really do it. If you're going to build it internally, the technical cost, the compliance cost, the human capital cost is just too burdensome, which I think is why it hasn't happened before today.
Hal, if I can add one point to that, I think that was a great summary. Comes down to speed to market. The ability to leverage, a full stack set of capabilities like what Ready Remit is that you offer to banks, and then access to the global network that Visa provides. It's a 1-2 punch to be able to help address these payment needs and demand that are in your bank today that your customers are looking for. And that's a great way to drive new revenue and diversify your revenue stream.
Great. Well, Rich, this
Excellent.
has been fantastic.
Excellent.
Thank you for taking the time.
Yeah, thank you both.
Yep, thank you both. Really great note to end on. Rich and Hal, appreciate your time, and everyone in the audience, thank you for being here. Thanks for asking these questions and for participating in those polls. You see the contact information that for Rich and Hal right there too, if you want to reach out to them after the program. We'll also be sending you a follow-up email that'll have a link to a recording of of our time together today, as well as the slides. So that will be coming your way. And with that, I'll officially wrap it up. Wish everyone a wonderful rest of the day, and I hope you'll join us again soon. Thanks so much.
Thank you, everyone.